Hello, this is Doc Severson for the TheoTrade report for Thursday, October 20th. Okay, what's going on the market these days? Not much at all. Really, the only thing that's moving these days has been the NASDAQ, because NASDAQ earnings are still pushing things a little bit higher here. And after hours, we had a little bit more from the NASDAQ, courtesy of Microsoft. And here's an intraday chart of Microsoft today, and you can see that after hours we released earnings and it went from about 57 and change up to just a little over 60. So about a 5% move from Microsoft as it beat both top and bottom line numbers. So this may be the only catalyst in lieu of getting any kind of forward read on the election at this point in advance. As we know, Janet Yellen's going to be pretty much handcuffed until we get to some of the jobs reports, which are going to be in early November. And of course, the most important one is going to be in early December, well before they actually meet for the final time this year to determine interest rates. But the more that I read, the less likely that I think that any kind of hike is going to be. So we're kind of stuck with earnings for now as being the only real market catalyst. So what do we have for tomorrow? Probably the biggest fish in the pond tomorrow is going to be GE. And if we look at GE and what we're expecting from them tomorrow, so we're looking for, and I'm going to go out here to the NASDAQ site and look at the fiscal quarter end for September 2016. Is going to be an EPS forecast of 31 cents, high of 32, low of 29. And what we've seen over the course of the last 4 weeks has been 7 down revisions. So this is why I don't think really anybody has any kind of confidence in this quarter. Now, if we look forward to December 2016, we can see that earnings per share are forecasted to be higher. So this is kind of in line with what I'm hearing about. Fourth quarter earnings are supposed to be better and may break this funk of the 5 straight quarters of declining earnings. So that is the thought right now, but right now this quarter is still in jail. Now, as we look at the chart for GE, right now this is a little bit of a problem because we're starting to see some technical failures here. If we look out at the weekly chart, and the reason why I'm taking so much interest in GE is that many times it's viewed as sort of a proxy for the US economy. So goes GE, so goes the economy. So what we've seen from GE's really since the 2015 July or August 2015 sell-off has been nice rebound in a series of higher highs and higher lows from here. But we've gone from a higher high to a lower low, so that is a technical failure. And so what that does is that increases the probability that any pop to the upside that we may get here in the near future. So if GE gets, from a consensus of 31 cents, maybe it blows that away. Maybe they sandbag and they come in with 33 or 35 cents, something like that. We may get a little bit of a pop to the upside from that. But this does increase the probability that any rip is going to be sold into and is going to create another lower high. What this will do is start to bring down this monthly chart. And again, as GE goes, so goes the rest of the market. So we'll watch this very, very carefully in the near term. Now, Microsoft, actually, this is not reflecting the after hours prices up here, but Microsoft is hitting all-time highs. And so those of you that are chartists out there are going to recognize this as a huge cup with no handle yet. So what we might start to see from this is many times we see stocks that hit after years and years and years, hit all-time highs. This becomes a point at which people take profits from this. So the good news gets sold into, and what we see is more of a flag, or this is the handle that gets built. And I don't know how long this handle is going to take for here, but you can see that the deep formation here, I mean, this is a 35-point dip down here, points to a target that's close to 100 on the upside from this once it finally breaks above there. So I would not expect this to just go blasting above $60 per share right this. The name of the game these days is to take very quick profits into moves like this. And so for right now, yeah, that's kind of what I'm expecting. After hours, we can see that for Microsoft, we are up at just a little over 60.5. So 60.5 right now. And that is just over all-time highs. So Microsoft hitting all-time highs, dead money for the better part of a decade here. Just dead money. And now has turned into a juggernaut because of the fact that more than likely it pays dividends and it's actually bringing in some earnings. Now I'll finish up today's report by looking at the S&P 500, and really what a boring summer and fall. This has been the lowest volatility market that we've seen for a long time. Now really this has got two ways to go here. So as I've been bringing up recently, that markets are just not buying the highs, but they are buying the dips. So if we have a decent dip, it's being bought and pushed higher. Consolidation is leading to another dip, which gets bought and causes that squeeze higher. Another consolidation is causing another dip, and then a squeeze in this case, not necessarily higher. So what we're doing here is we're kind of vectoring into the apex of this triangle up here in this massive consolidation that we've seen for a couple of months now. So not only this summer, but also this dip is just extending the triangle pattern here. And as we get closer and closer to the apex, the stronger the move will be when eventually the direction is revealed. Now again, what I've been talking about is that any pop to the upside, so if we see an upside move, I think it's going to be short-lived. Again, the highs are not being bought. So unless this market changes its tune and starts buying the highs, which I don't sense anybody really wants to do right now, then the only path for this is, even if it does try to pop out to the upside, is going to be eventually to pull lower into this range again and then see whether or not the dip is bought this time. So this is kind of what we're looking at here for the next few weeks until certainty starts to come to this market in one way or another, or conversely, if uncertainty comes to this market, which is going to push things lower very rapidly. That is it for today's report. We'll see you this weekend in the weekend report from TheoTrade. Take care, folks.